Hi, Stuart Bruce here, and I am the Spare Time Property Investor. In these podcasts, I'm going to share tips, tricks and lessons that I've learned and will hopefully help you, especially if you're still working the 9 to 5. Hi, Stuart here, and thank you for joining me for another episode of the Spare Time Property Investor. In this episode, I interview Rick Braithwaite, otherwise known as the Property Pig on Instagram. He's a chartered surveyor by trade, so we go into his thoughts about why more surveyors aren't property investors. We talk about how he invests in property alongside his national business, Braithwaite Energy, his family life. He has 3 children, and he also touches on that his wife also has a business, so it's a very, very busy household. But before we get into it, I'd like to thank you for watching this video or listening to the podcast. And if you've enjoyed this or other episodes, please take a second to give me 5 stars. And if you've got a minute, please give me a nice review. It helps other people find the show. Thanks for the support. And now to the interview with Richard Braithwaite. So thanks again, Rick, for coming on to the podcast. I know you're on holiday, so it's great you're able to fit us in. So first off, it'd be great to hear about the business that you run, what your normal week looks like and how you manage to fit in property investment around
that. Yeah, sure. Yeah, thanks, Stuart. Thanks for having me on.
Right.
So yeah, going back to the start, I guess I'm a chartered surveyor by trade. That's what I trained to do when I was sort of starting out in property. That was back in sort of 2004, 2005. Mm-hmm. And the business that I run now, I set up in 2009. So I qualified as a chartered surveyor in 2008. And then I set up my own business in 2009. That's the one that I still run today. Probably roughly about 50-50 alongside property investing. Although, as you know, like sometimes the sort of the balance between the two differs. Sometimes you've got a lot on, or things change. So, but yeah, I mean, the business itself, that's you'd class it as a property consultancy, which advises mainly commercial owners, so commercial landlords and commercial owners of commercial property, on how to make their buildings more energy efficient. So initially it would start off with providing an energy performance certificate, which is known as an EPC. That is, as you know, that's mandatory for any property that's being sold or let. You also need them when they're built as well. So basically we provide those, and then that forms the basis of our advice. On top of that, we'll then give them sort of options and improvement reports to help them make their buildings better, and we'll also advise them on costs as well. So it's sort of marrying up the two things together. So working out what energy efficient improvements you can make to your building, and then also what the costs are. So between the two, we can sit in with, whether it's project managers or building surveyors. We can feed in direct to the landlords, whoever it is, and they can then make the decisions based on our advice. So they're doing a refurbishment on a building, and we can say, change this, change that. Don't spend your money there because it's not going to make, you're not going to get a return on that, or have you thought about this, because it's not as much money, but you are going to get a huge payback on it, or a decent payback on it. So it started off as me just running around sort of like as a headless chicken initially, doing just as many certificates and EPCs as possible. That gave me a really good grounding, because now obviously I'm sort of very, very comfortable with any building or any property and what's required. Over the years, I've built up the team now, so we're now we're a fully national firm. I run things from just south of York. I set the company up in London. Started employing people sort of around about 2011, 2012. And then now it's a network of a team dotted around the whole of the UK. So as far north as Inverness, and as far south as London, and then quite a few people in between as well. So we sort of get around the country. We've got to get to site, got to get to buildings, and then from there we can give our advice. So yeah.
Sounds like a sizable company, and especially, you know, covering the whole, well, the country by the sounds of it. So how much of your time does that take up in your week?
I would, since I've started employing people and getting support staff in, it's been a lot easier. And that's now, I've now had a sort of a good support staff team for about 3 or 4 years.
Okay.
So yeah, I mean the normal week will be, you know, get up, you know, I try and get up at sort of 6 o'clock in the morning. Normally that's just a case of getting into the office, which is there's a separate building where I live, which is used as the office, and we have people who come and work in that office from there. I normally get in there straight away and just start cracking on with a few things. You know, the kids will get up around about sort of 8, 7:30, 8 if I'm lucky, and then, you know, I'll sort them out initially, get them fed, get them watered, and then, you know, if it's a school day, I'll probably do a school run quite often. So I'll take them to school. We live in a village, so I can walk them to school, and then, you know, whether it's do quite a bit of exercise, so I'll get that in hopefully first thing, and then probably back at my desk by normally around about 10 o'clock, and then I'm just working through then till whatever time that needs. But if for example I've got there's some property investment stuff on that day, or I've got things that I need to do there, that'll feed in. And you know, it's just like when you run your own business, you just do what you need to do on any given day. You know, just do what it takes. But I'm lucky enough that I can sort of fit it in around the family, and you know, so I'll do school pickups quite often, and, you know, have food, have dinner with the kids, and then it'll be a case of I might have to get the laptop out again at night and crack on again. So it's, yeah, it does vary. It does vary.
But I suppose having the office where you live, that must help in terms of managing your time. Or does it bleed into your kind of spare time? Does it bleed into your kind of the time you wouldn't normally kind of be expected to work? But I suppose it's your own business, isn't it? So you know.
It's a good point. I mean, the actual office itself is it's only 10 yards away from the house.
Yeah.
But it is a separate building, and it has a feel. It's a tight. It's a couple of seconds commute. It's nothing. You're just straight over there and you're in. But it does have that separation feel. So you do feel like you are, you're getting out of the house. You're moving away from that, and you might. It's all about mindset, isn't it? Yeah. So once you're in the office, you're in work mode, and you can crack on, and the kids know not to come in, and they're good with that as well. So it's fine. It's a good separation. But you can, unless my wife Suze is very good at as well, like sort of letting me know when things, right, it's 3:20, are you doing the pickup? Yeah, I'll go and do the pickup. Or if we share the cooking a little bit, she does the most of it, but then she'll say, right, we're having dinner in an hour, and then it's you separate it. So it's just again, it's all about communication. A lot of it's to do with communication as well, and I am really conscious that I try and do what I do so that I can have the choices to be with my family is a lot more than most people can be. So I just make it work from that front. But then sometimes there'll be periods where I just have to go, right, I've got to go and do this. So I'm going to go, and I've got to go and see someone or do something or whatever, and everyone understands that. So it's just being having the flexibility, but being communicating well with everyone else in your family, and it seems to work, I think. Yeah.
And it must be nice to be able to have that flexibility. Most people wouldn't be able to leave work to go and drop their kids off and then get back on with it and things. So it must be nice to have that flexibility there, so you can have that.
It's a big part. I mean, I did a lot of work on my visions and sort of goals, like goal setting a couple of years ago. And a big part of that is just looking at like how you want your average day to look, and I want to be able to do that. So it meant that I want to be able to take the kids and do stuff and see them, and if something comes up and there's something on at school, or there's a trip on, or we take an afternoon off, then I can do. I definitely work hard enough that I can afford that, and if I need to make it up in other ways, I just do. So it's just sort of it works, I think, hopefully.
It sounds really good. Yeah, it sounds like you've got a good balance there. So you're a surveyor by trade. So I'm really interested to hear about your thoughts about why I don't see surveyors investing in property much. I don't know if that's like unfair, or whether that's just because the people I've met haven't invested. But what are your thoughts in terms of why more surveyors don't invest? Because for me, it would seem like an obvious kind of transition for people to go from really understanding the bones of the property and things like that to investing in property. So what are your thoughts?
Yeah. I mean, I think it's a really interesting sort of question, really. I mean, I think if I'm looking back, I'm just looking back to when I was training to become a chartered surveyor. I suppose a lot of the companies that you're working for are probably dealing with it's a variety of different types of property. So for me, it was just a lot of commercial property, and a lot of those commercial properties were big assets. So we're talking tens of millions of pounds worth of property, and that could be anything from a shopping centre to a multi-let office block, parades of shops like retail. It could be anything, and I guess a lot of those sort of properties are owned by sort of very, very large institutions like pension funds, insurance companies, and they have a very, very sort of, well, compared to what we look at as residential, when we're looking at things like HMOs and the returns that we're looking for on those, when you compare them to what sort of a pension fund would expect on a return on investment on their properties, it's a lot lower. They would take a property. I mean, it varies, but prime property could be as low in London, could be as low as 3%. 3% yield. They're not looking for huge. It's got a cash flow. It's got to wash its face. But anything. You start getting up into sort of 7, 8, 9, 10% yields, and that starts looking like a risky investment.
Especially for pensions and insurance companies, they must be really, really conscious about keeping their customers' money and everything safe.
They've got to. So they've got to have fairly vanilla investments that are going to cash flow well. So that means low risk on voids. You're looking for properties in prime locations with prime tenants, or very, very good tenants with good covenants, and what that means is you're going to be getting a much lower yield. Obviously yield is rent divided by the value of the property. There's a very sort of crude calc, but that's your sort of the measure. And they can't afford to take those sort of risks. Yeah. So when you're looking at a HMO that is it could be 14-15% yield, or gross yield. Your net yields might be sort of further down, sort of could be 10, 9, 8, 9, 10%. That would look like a really risky investment. And to be fair, with all the voids that you do get and the turnover of tenants, that's just not suitable for an institutional investor. It's not it just wouldn't fit their criteria. So going back to the surveyor thing, I think because of these properties, they require a lot of surveyors to work on them, and whether it's from management, letting, sales selling agents, you might have building surveyors who are involved in the refurbs of them. That's their exposure to a lot of these properties. So I think some of it comes down to that. And also on the lending side, I had had a chat with a friend who is a chartered surveyor, works for one of the big pension funds, and he would sort of class certain lenders that I used for bridging loans, for example, as quite sort of quirky and quite sort of as he described them, a bit funky. And I just thought, well, I just haven't got that opinion of those sort of lenders. I'm very comfortable with that. I don't know. Does that mean that I'm risk averse, or do I like taking risk? I'm not really sure, but I just think it's an attitude, or it's a view of how they look at property rather than what they do. So yeah, and then if you're looking at entry levels for commercial property, generally speaking, they're more expensive. So if you're looking at a high street shop, you might be able to pick that up for, I don't know, 250,000 pounds or whatever it is. But you start getting up into the offices and the big industrial units, like the big sort of distribution units. These are tens of millions of pounds. So that's just not going to, obviously, as an individual investor, you're not going to be able to afford that. So yeah, there's a few things that sort of mix in. But you're definitely right. I think there are few. I don't know many surveyors who invest in the way that we do in residential property. So
yeah, no, that's really interesting, especially kind of, I suppose, kind of almost being trained in that really risk averse, very, very safe way of working with property. It must be for you, especially as somebody who does the both. It must be quite a strange mindset shift going from one to the other. That must be kind of odd.
Yeah. I mean, definitely. I mean, initially, I think it affected my strategy early on. So my strategy early on was very much, buy to let property in a good location that had, hopefully good potential capital growth prospects. But it was going to rent well. It was going to be low management issues, low management costs, and that sort of fits in with that sort of mentality. But when you get to a point where you want to start pushing it on, recycling cash, and working out how you're going to sort of expand and buy more properties, it's not about taking risk. It's just about understanding what that risk is. So you've got risk with debt. You've got the risk with the actual, if you're buying the actual deal, is it going to work? That could be anything from the refurbishment costs all the way through to is it going to be lettable, in terms of is it going to be a rental demand, all those sort of things. So I think all you need to do is to yes, it could be viewed as risky to someone, but I think risk is only a concept if you don't understand the actual deal, or you don't understand the actual investment opportunity. Once you understand what makes up a good deal, then that de-risks the whole process. So there's I just think it changes from it's definitely a mindset thing, but you can get your head around it quite quickly with anything. It's education and research.
Yeah, it sounds like you've done a good amount of work, kind of doing that for yourself, though. That's really, really good. And especially as you will know so much about the properties that you look at, and how to make them. So with the business that you run, it's all about helping commercial properties become more energy efficient and things like that. With the drive to become more energy efficient, and the kind of I suppose the ambition to become carbon neutral and things like that, has that really come on in terms of companies' willingness to pay money for things that they might not have previously?
Yeah. I mean, 100%. I mean, so when I first started the business, the energy performance certificates had only just come in that in 2008.
Okay.
And they were very much seen as a piece of paper that was a necessity to get a transaction through. There was no sort of value attributed to them at all, which was quite. I didn't really mind initially, because I was enjoying running my own business and making money and all that that goes with it. But then after a while, it did start to grate, because they were very much seen as a bit of a nuisance, really, because they weren't really given any value. And it was just an extra thing that an owner would have to sort out if they wanted to rent their property out, or whether they had to or sell it. But as time's gone on, sort of in 2018, they brought in some minimum standards. So you have to get your ratings up to an E or better now, and it's coming in for commercial property in 2023, but it's already happened for residential. But anything that is F or G rated now, so that's the lower end of an EPC rating. You have to do something about it, even that's during a tenancy. So it's just when that property, if it's being let, you have to basically improve it, or look at ways of improving it. So that's definitely driven it up from that end, the legislation side. But then on the other side as well, there's definitely now a much more sort of a responsible view to the environment, and there's a thing called ESG, which is to do with environmental, social governance. Okay. And you'll see it now on sort of funds, like fund managers will advertise that they will have one of their funds will be ESG compliant. So that it means that they're investing in. This could be for any type of investment, not just property, but they're investing in something that's good for the environment, or the companies they're investing in has some sort of concept about how, or a strategy of how to be energy efficient, or work with the environment, have good social responsibility, and make sure that they're governed, the actual business themselves are governed in the correct way. And so that whole thing's now sort of pressure, and there's a big sort of now requirement by investors who want to invest in these type of assets. So if you look at property, there's definitely going to be more investors wanting to invest in green properties going forward, and they'll want to have and also tenants will want to occupy properties that have landlords who are conscious about their energy efficiency, because it's going to help them save on their bottom line and run their business from those properties. So it'll get more and more. By 2030, they want to bring the minimum EPC standards up to a B. So that's a long way to go. I mean, I don't know the stats off the top of my head, but the sort of the breakup of property in the UK, there's huge amounts that are below that level, and there's going to be money has to be spent on that, in some shape or form to bring that up. Yeah,
that would be a big kind of challenge for a lot of older properties, especially, I'd assume, to get up to B.
Yeah. I mean, you just, I mean, on a lot of properties, you just won't be able to get to that level. So as long as you can prove that you've done everything possible to get it to a certain level, that'll be enough.
Yeah.
So they won't just say, right, you've not got it to a B and therefore you can't let it. But you will be able to get,
demolish it. That'll be it. No, so there'll be
exactly.
There'll be some kind of, you've done these things, and we can see that it's not possible for you to get up to that.
Yeah.
Right. Oh, okay. That's really interesting. And that's 2030, is it?
That's 2030. Yeah. So that, I mean, even now, if you prove, even with the minimum standards now, if you can prove that you've done everything you can, you don't have to get it up to an E rating. You can just prove, but you have to show why you can't get it, and more often than not, landlords would just rather spend the money and get it up to an E. So it's it'll I think it'll get bigger, and it'll get more like both from the legislation point of view, and also just the sort of the general concept of society, that people will be more willing to, or want to invest responsibly and help the environment. So it'll be interesting.
Yeah, well, definitely. Yeah, that's really one to watch out for, to be honest. Okay, cool. Have you got any projects you're working on at the moment? Any investment projects?
Yeah. Now that I've managed to find some plaster, I can now crack on. So yeah, currently my two latest projects that I've done were in Sheffield. So just on the fringe of the city centre. Both were Victorian terraced houses, which I've converted into HMOs.
Okay.
So one's a 5-bed. That's now 4 out of 5 beds let. It's been obviously it was a bit of a challenge during lockdown. That should have completed before Christmas in terms of the refurb, but that was all sorts of issues that sort of put it back. And then we only really just finished it before COVID came in, which was just obviously the worst time because no one was moving around. So that sat empty for quite a while. But then the last couple of weeks has been crazy. So that's filling up really well now. I haven't even had to change any of the rentals. It's rented out at the sort of the prices that I'd done my research on. So that's been really sort of good from a just a confidence point of view in that area, knowing that it HMOs work. So that's been good. The other project that's sort of midway through, I think we're sort of coming into the third quarter of the refurb. So I think we've probably got about 4 or 5 weeks left on that. But we're at sort of second fix stage now. Kitchen's going to be going in. We had a bit of a delay with that one. That's very close as well to that Sheffield property. That's going to be a 4-bed HMO. Rents are a bit higher where that is. It's closer to the city centre. So yeah, it should work really nicely as a 4-bed. And then after that, there's no other projects as such, but there's a couple of purchases I'm trying to get through. An off-plan flat in Manchester, and I am also selling a property in London as well at the moment, which has got its challenges to say the least. Just with everything after the Grenfell Tower, you need all the different cladding assessments now and all that sort of stuff, and that's been a bit of a headache. But yeah, so they're sort of the 4 sort of live things going on at the moment. Fairly under control in terms of the time that I'm spending on. I outsource quite a bit of I outsource a lot of the sort of the project management side of it. Obviously, letting side of it, I've got letting agents, and then the other 2 sales. The off plan, that's quite straightforward, and the sale is just a sale, so that's quite straightforward as well. Hopefully,
interesting.
So yeah, they're the sort of the things going on at the moment.
Yeah. So where are you based then? So you've got those 2 in Sheffield. You've just been doing.
Yeah.
One down in London. So where are you based in the country? Just kind of for my.
Just south of York.
Oh, okay.
So so I can. My wife Suze is from York originally. I'm from the other side of the Pennines. I'm from Lancashire originally. So there's a bit of a War of the Roses thing going on, but yeah, it's all good fun. But we actually met down in London back in 2009. So yeah, I was as I was setting up the business, we met down there, and we lived down there till 2016. So we had kids in London, and then we just made the decision we could either. We had to move out to get more space, just because it was just the price of a 4-bed terraced house in Putney is was the best part of 1.2 million or something, 1.3, and wasn't quite at that level at that point. So we just thought, well, what do we do? Do we go? We can either move out to the sort of M25 home counties, or we can go back to our roots. And we looked at it, and York fitted in really well because you've got great transport links, both train and motorway links. I still go down to London a lot because of things that I've got on down there with clients and property related stuff. So that's. I can be in London in sort of just over 2 hours door to door, which is great. So yeah,
it's going to be actually. That's much quicker.
Yeah, I mean, so it's great. And there's a lot of the portfolio is, as you rightly point out, it's Yorkshire, sort of Manchester, Greater Manchester, and then the northwest. So sort of Preston, moving all the way up to Lancaster as well. So it comes down that like an L, and then there's a couple of bits in London as well. So yeah, dotted all over the place.
Makes it exciting, I suppose. Cool. So
yeah, interesting.
just a little question. I've got to ask you, where did the property pig name come from? Before we move on, I'll just remember.
Yeah.
What you've got on.
Yeah, loads of people ask me this. So there isn't really anything to it. I mean, I set up the Instagram account actually on holiday where I am at the moment, just a couple of years ago, and it was only going to be initially sort of like a bit of fun. Didn't really have a sort of an idea of or a plan with it. It was just a place to stick up a few photos of projects and talk about other sort of issues around property. I'd seen there was quite a nice little property network on there anyway, and I thought, well, I'll just get involved in that. So it was just something, just a name that
nothing really to it
that I thought of. Yeah, it was kind of it was just to stand out, I guess, and just have it on there. People just remember it, and then people are always like, I don't get it. Like, what does it mean? And then, I mean, early on, I was thinking, well, I should try and make something from it. So it was like, piggy bank, money. There's all sort of connotations with, there's like the Chinese. It's a Chinese symbol. The pig means wealth and good fortune, so it kind of fits in with that a little bit. But I don't really sort of play on that really that much. I try, I make the accounts about me as an investor rather than anything else. And unfortunately, the handle is now stuck, and I probably will keep it. So
Why not? Why not?
yeah, cool. It's a talking point.
Yeah, no, definitely. I just remembered it was I just noticed it.
People often say they don't know. Yeah, people often say they don't actually know my name. They just know me as the property pig, which is like okay.
But, why not?
Yeah,
cool. So going back to how you got started, then what originally got you interested in actually investing in property? Was it after you'd done your qualification in surveying, or was it before? And how did you what sparks it?
I don't think the surveying thing was that. I mean, although it's great to have, and they are very much related and they help each other. I think it probably just comes from an early age. My dad did a bit of property investing, and sort of buy to let stuff in good locations that he knew well, and so I kind of saw the power of it from that point of view, and just understood it. I mean, I've always been interested in business. I've always understood how the economy works. I did economics for A level. I did an economics degree. I then went on to do my masters in estate management, which then started the commercial property sort of stuff. But so I've always been interested in business. I like I suppose running my own business was never the main goal, but I looked at it. I wanted to just make more, have more income and be more independent and have more choice in life. And I always knew property was going to be a good tool for that, and a good vehicle for doing that. So initially, I started looking at buying below market value properties in my own name. Mm-hmm. And then the tax changes came in, so that would be round about 2000 and when they were introduced. I think I'm trying to think when it would be. I suppose it'd be sort of 2011, 2012 2012 when they were introduced, and I thought, this isn't going to work. So that's when I started looking at the limited company, and then you start delving into that more and doing your own research, doing your own education. Obviously more recently podcasts that are out there. There's some great podcasts to find out about it, and you start learning about leverage and debt and how it all works together. And suddenly it's like a light bulb moment. You think, this is a great way of doing it. So it kind of grew over time, I guess. It never.
Yeah, it's an amazing amount of information out there actually. Once you start digging into it, like you were saying, you kind of you started, and then you kind of, as you felt almost, it sounds like almost as you become more, looking at it as more of a profession, more something you take more, seriously as a longer term thing, to build in its own right. There's so much information out there. It's incredible. I really.
I mean, you shouldn't. I mean, I haven't got any problem with paying. I mean, I pay for a few things, like whether it's mentorships or mastermind things or whatever. I've never been on a property investing course or anything, but I haven't got a problem with them. Obviously, some of them have got a bad name, but some of them are great. It's just doing the research and getting the testimonials from people, speak to people who've done them and find out what they're all about. But like you say, I mean, things like the Property Hub, for example. I mean, the amount of information that those guys give. I was very lucky because there's, from what I did, subjects at school and university and the commercial side of property. I mean, I did invest. I was an investment agent for a little bit in commercial properties. So you kind of, I suppose, you get all these bits of information, you soak it all up over time. But if you just suddenly turn around and you haven't got any of that background and you need to get educated, it's hard. It's hard to work out what who you should be listening to and who you shouldn't be listening to. But I mean, I would say just get on the podcast and find out. There's so much free stuff out there. YouTube is a great source now for information on watching videos and things. So, there's anyone who's interested in property, get into that. Still go on a course if you want to, but just make sure it's the right one for you.
I also think as well, if you're willing to put the time and effort into doing a lot of that research yourself, then you might only have a few kind of gaps that you need to fill, or maybe something more about accountability or something else. Then, because you've put effort in, read a couple of books, a few books, listen to a few podcasts, watch some YouTube videos and stuff like that. And if you kind of get the overall shape of it, then you can go more specific with with somebody in particular who is great at one thing, and then you can really kind of drive home. It does. Sometimes when you hear about people and they spend tens of thousands of pounds on something, and they've done sometimes from speaking to people, they've done very little research and stuff like that. You kind of think, oh God, you're setting yourself up for, I don't know, not a failure, but you're not setting yourself up for success. I suppose is the way round to kind of, I think about it. Anyway.
I think, I think that's really risky doing it that way. Especially if you don't really know. Essentially, you're going on one of those courses because someone else has told you, or you've seen someone say something online that this is a great course and this is what it's going to achieve. But it's like anything. If you can be armed with that information and you can be armed with that knowledge, but unless you actually do something about it and take action, then it's pointless. And I think with property as well, there is quite a big sort of pressure from everybody or people, just to you've got to have a really, really specific strategy nailed on. I definitely think you do have to have a strategy, but it's also fine to be able to develop that strategy and tweak it and change it over time. Buy to lets, just understand the process of how to buy a property and get comfortable with all that, working with solicitors, working with mortgage brokers, working with any letting agents or whatever it is. It's you just have to get comfortable with it, and then over time you can build that up and develop it. And property is such a long term thing. As long as you don't think it's going to be an overnight get rich quick scheme or situation, then and you've got patience, then you should be all right. Absolutely,
not the make you a millionaire in 6 months sort of stuff.
Yeah.
And it is a long game. It's a long game, isn't it? And it concerns me sometimes when you see some stuff that's being advertised. But no, I think you're right. And that whole thing about dealing with solicitors, dealing with mortgage brokers, all these bits and pieces, getting a feel for what to watch out for and what frustration to kind of
Yeah,
it's always part of
you
it,
just
isn't it?
learn. You just learn. You learn over time. And the one great thing about property is that time is on your side with it. Even if you don't get something. I mean, if you buy an absolute nightmare of a deal and it doesn't work, then that you may struggle to come back from that. But generally speaking, if there's something goes slightly wrong with it, or you don't quite get the rents that you wanted, or whatever it is, time is a great healer in property, and over a long period, it should even itself out. So you've got to remember that you can't beat yourself up on every single thing that doesn't quite go right. Yeah.
Definitely. I heard someone say it's like having a bad haircut. I mean, I can't comment, but I heard someone say it's like because it grows out. So like, a couple of weeks down.
Yeah,
down
that's a great analogy. Yeah. Yeah, that's great. Yeah, I like that. Yeah.
So what's the favourite deal you've done over your portfolio so far?
Yeah, the one that I enjoyed the most was a commercial to resi conversion. So it was an office building. It was bought effectively with vacant possession. So that there was a tenant in there, but they were holding over on their lease, and they were looking to move on. So when it was valued, it was valued with what's known as vacant possession, i.e., it's assumed that no one's in there. So it got a good deal on the actual cost of that. And then we just really enjoyed the whole process of working with the architects, coming up with different ideas for the property and different layouts and different concepts. We kept the ground floor as a retail, and then converted the middle floor into a studio apartment, and then the top two floors was a 5-bed HMO.
Oh, wow.
So the two residential units is let to students, and the ground floor is currently let to barbers. So they've obviously just getting back on their feet after lockdown, but it's fully let. I love the deal because it's the student side of it as well. The yields are good, the rents are good. The thing I love about students as well is that you often have it let, or the agreement for leases are organised a year in advance, or certainly well before the academic year starts. So that someone's going to be in there next year, and they also pay. They pay for, sometimes it's 48 weeks or 52 weeks, but you just know that you're getting that guaranteed income. So it's great, and it's all inclusive as well, like all inclusive rent. So it's just very neat and tidy. Yeah. But yeah, I mean, the property was then revalued as a commercial value. We got a commercial valuation on the whole property. So when the way it's structured at the moment, we left all the money in, but there is equity there now to take out at a later date if we needed to. So that, just from a more sort of in-depth side of it, and it was there's planning application was involved. It's in a conservation area. Just really enjoyed the whole process. But that's probably my favourite one so far.
It sounds really interesting. I suppose it must be quite nice having those different elements working in the same property as well. Like the retail and then the student accommodation and things like that. It must have been.
Yeah, it's diverse. It's
interesting. Not just, I suppose, like anybody invest in property. Once you've done a 2-3 buy-to-lets, a buy-to-let's a buy-to-let. You know what I mean? You'd get bored of it. Having something like that where it's it kind of nicely diverse within one property. It must be. Sounds good.
It's good from it. I mean, that type of property, even it would be viewed as going back to what we were talking about before. That would still be viewed as quite a risky investment for some. For sort of like your institutional investors, it would be too much. But it's around about 10%, 9-10% yield. So, but that type of thing is getting more towards, I guess, surveyor, the chartered surveyor type work, and you can bring in all the different elements of what you've learned. And I mean, anyone can learn it. You don't have to be a surveyor, but it definitely helped, having that knowledge when doing something like that.
Yeah, I think for a lot of people it take a good few years to build up the experience and knowledge to be able to do something like that. But I suppose with your background, that must have really helped. That's great. Cool. Okay, so now 3 tips. So this is 3 tips about things that you use to kind of balance property investment around your life, but also 3 tips other people might benefit from to do the same thing.
Going back to what we were talking about earlier about fitting it in around your family life, like communication, and make sure don't, when you run your own business, like I've said before, like you sometimes you just have to drop everything and you have to go and do something. It just has to be done. I mean, it did help that obviously for example, my parents get it because they ran their own businesses, so they understand what it takes to run your own thing. So they've always been very supportive on that front, and actually like good mentors in that sense, and sort of helping me out with things. With my wife, she also runs her own business as well, so she understands sort of the type of things as well that are required. She does do more of the like looking after the children, because obviously the newborn, she's effectively on maternity leave at the moment. But I suppose one of the biggest tips would just be communication. So just make sure it's like at the start of the week, plan the week out. What have you got on? Make sure everything fits in place, so that you're not just springing something on someone, on your other, your spouse or whatever, last minute. It can be planned ahead. So definitely planning ahead. I don't do it enough, but I would definitely say when I do it, it definitely helps things. Just trying to make things just generally as efficient as possible. Getting your routine sorted. We've just introduced a sauna into the property consultancy business, and I'm just setting it up with. I've just taken on a VA for my property investing side of things, and we're going to be using a sauna on both things now, and it's just been a game changer in terms of just being able, because you can communicate with each other through it, as well as manage all the individual projects, have it all in one place, and it just makes life a lot easier. So I'd definitely look into getting some sort of there's a few different ones out there. I think there's Trello, Asana, Monday. There's all sorts of other ones, but I chose definitely get something like that involved. And I always think, like, just sort of being humble about things. You never worry about being never worry about your experience and how that and measuring up to other people, because as long as you're humble and as long as you're open about it, and you're not trying to pull the wool over anybody's eyes, most people are like really happy to help and happy to sort of pass on their knowledge. They can't spend all the time doing that because they've got their own stuff to sort out. But if you approach people, I'm probably sort of thinking about like younger people who might not have the confidence to walk into a room and start networking with people because they think that they're not good enough, or they haven't got the right experience to be there. But I think that's a load of rubbish. I think it doesn't matter what your experience is. Just be confident. Do your research in what you're trying to do, so that you're not basically you're not trying to fob anyone or sort of pull the wool over anybody's eyes. But if you're open and transparent about your level of knowledge, most people don't mind that, and they're happy to help. And it's just it's just a natural thing. So that's probably one of my biggest tips for sort of younger people trying to get into things. That's
I think that's a great tip. I think as well, since I've been in kind of looking into property and then kind of getting involved with it myself, it's such I found it anyway, such a nice kind of community, for want of a better word. You know, people are so open.
Yeah, yeah, yeah,
People don't seem to have like an attitude. You know, I've done other things where it's like getting blood from a stone, getting an answer from people about certain things. But in property, people seem very
yeah,
open. But I would say the other thing I would say
yeah,
about you're saying about like younger people, I think one of the things they really, really do
yeah,
have, which is of massive benefit, more so than, you know, people a little bit older, they're so enthusiastic and energetic and stuff like that. And sometimes like you need that little boost of somebody, you know, and I think that's great when, when people like, you know, very early 20s, late teens kind of come to things and you speak to them. It's infectious. So yeah, they should definitely feel confident to people. I think it's a really good point.
yeah. I mean, it's always good to be. I mean, you never want to be the most experienced or, you know, whatever it is, cleverest, intelligent, whatever thing you want to call it. You never want to be that person in the room. You want to be down either to what you want to be learning from experiences. You want to be getting in there, and you're going to learn more from pushing yourself and stretching yourself. So I think, you know, people can get their head around that and be more comfortable with it, then I think, you know, it would help a lot of people.
No, I think you're bang on. Yeah, that's great. Cool. So next question: Have you got a top business or property book that you've kind of really benefited from, or you'll go back to?
Yeah, business books. I mean, I've read a few, and I suppose like the classic, like Rich Dad Poor Dad. You know, that's everyone's read that, and it is good for sort of getting your head around a few bits. I read Shoe Dog by Phil, which is like a I don't know if it's classed as an autobiography, but it's basically Phil Knight, who set up Nike, or Nike as it's apparently pronounced. He started Nike off from you know, from scratch back whenever it was back in the 60s, sort of buying designing shoes from Japan and importing them into the UK. And that's a really cool business book, from just seeing how he overcame lots of obstacles like competition, and how he then expanded out to the East Coast, and, you know, and brought it all together in the West Coast, and then suddenly it just became this, you know, absolute behemoth of a business. And I mean, he's not quite as prolific as like your Bill Gates and your Warren Buffett's, but he's in and your Jeff Bezos, but he's very much in that sort of sphere. Like they know him. He's on that sort of level, but he's a bit more sort of under the radar with a lot of people. But I mean, what he did there with Nike was incredible.
Didn't he? Am I right? I think I've heard someone else talk about this book. Is it in this book that they say about him? Did he use like a waffle iron or something like that to press the rubber for some of the first shoes to like do prototypes? Is that?
Yeah. So he did. Yeah. So he did a lot of the design. Like he was a really good runner, sort of like a really good college, like that. Yeah, you know, American university runner. And I don't know whether he ever competed at any. I can't remember whether he competed at anything else. But one of his coaches that he worked with, they just used to do loads of designs and work loads of things out, and yeah, they came up with a lot of the new the concepts that are still used on Nike trainers today. Yeah. And it was weird stuff like that, yeah, like using waffle presses and things like that. But yeah, he did everything in that business initially, and then just grew and grew. And so it's like a really good. I like books that are sort of inspiring, as well as you know, you're learning a bit about, you know, how it all fits together. I found it really, really interesting.
Yeah, sounds good. I always think as well, it's always good to remind ourselves that these people, you know, the heads of these huge companies, started off in their kitchen, or started off in their garage, or started off in their wherever. You know, it's amazing to think of the problem.
Yeah.
That's great. Cool. Have you got any tools that you kind of use to help you with like efficiency or whatever to balance things or work on your business?
Yeah, I mean, I try and do everything on the cloud. Whether it's using sort of Google Drive or Dropbox, just so that you can share most of my business. I mean, both on the investing side of things and on the property consultancy. Everyone who's involved in those businesses, whether it's bookkeepers, accountants, you've got the team members within the property consultancy, and they're dotted around everywhere. We all need to be on. We all have our laptops, and we all just sort of feed in. So like, just everything's on the cloud, Google Drive, and sharing those sort of things, which is nothing rocket science there. I would say, Asana is changing things really significantly. Like we were running things off spreadsheets before, which was just really clunky, and they weren't it was fine, but it just wasn't linking up. But now, we can be doing. We'll do hundreds and hundreds of site surveys this year, and it's just one person is just basically their job. One of their main roles is with Asana now, and they're just loading it all up, bringing the different team members in, communicating through that. If I need to be asked a question, it can be fed through to me, and I can look at it on my phone and sort of answer something back straight away, and I can be anywhere. I mean, the big thing for us is flexible working. So we should be able to do our job and do anything from anywhere. So it's just making sure all we need is an internet connection, and then that's how we do it. So yeah, I suppose we're not super hot on tools and things to make things better, but I would say at the moment Asana is the leader on that.
Yeah, and I'll tell you what, the amount of people I speak to, and Google Drive, Google Docs, Google Sheets are like the cornerstone. And we use them; they're amazing. And the amount of people who say that because of the access and stuff. Yeah, that's a real common thread.
Yeah.
Through the interviews I've done, people love it. I love it. So.
Definitely.
This next question, I don't know if I'll ask it, but I don't know if it'll make sense. So basically, this question is, this is a bit of a challenge around for me, because I feel like I've probably had some of the worst jobs out of the people I speak to. And it's kind of a challenge to say, what's the worst job you've ever had? Because I think I've probably had worse jobs than you.
Yeah, I've had some pretty interesting jobs, but they've been more sort of like holiday jobs, like work. Sort of like during holiday. But I mean, one of them was working in a sweet factory.
I've worked in a sweet factory.
Yeah, and it was actually all right until you get paid at the end of the week, and then you go and spend all your money down at the pub. And then you have to pitch up to work the next day. And one of the roles was to sit on the production line of the sweets and sort of quality check all the sweets. So you're trying to pick out all the different the ones that haven't got the wrapper on, or the ones that are missed, or cracked or cut in half. And obviously with a hangover, that's quite a challenge. So I'd probably say that's probably been my worst one. But I guess I've been quite lucky really overall. I went straight out of uni into a graduate job, and then set up my own business. So it was, it's not been too bad on that front.
Yeah, you've avoided. I went to the sweet factory, probably a different bit of it. It was terrible. Last question. Yeah. If you could speak to your 18-year-old self, what would you tell them?
Don't like what I was saying before. Pick a path. If you're passionate about something, pick a path early and stick with it. We do. I feel that in school, and I don't know if it's as much today, but I was very much pressured into, right, you've got to get your A levels, and then you've got to go to university and get a degree, and then you go and get a job. And I didn't really have much thought into what I wanted to do. And that was sort of seen as a real positive of not being pressured into choosing something. But I would say, if you are 18 and you are really passionate about something, just go for it, and do the research in that thing. If that then works for you, and it means that you don't go to university, you just crack on with something, then so be it. Like, don't feel pressured into doing something that you think society expects you to do. Just do what you think is right. No. And as long as you've got a good business plan and a good idea behind it, you've done your research, then I don't see anything wrong with doing that.
No, I think that's really good advice. Like you say, there's this expected path that for people it's not always right for everyone, is it?
No.
So that's a great
yeah.
That's great. Cool.
Yeah.
Well, that's us. So thank you for coming on. It's been great. To kind of keep in touch. But where can other people find you? What's the best place for them to find you?
I suppose the best, if they want to have a look at property investment stuff, just go on to Instagram and you type in Rick Braithwaite or the Property Pig. So it's _property_pig. My face will come up, so hopefully you'll see that, and that's property investment, a bit of business and whatnot. But if you want to have a look at the sort of the energy business and the property consultancy, then again there's LinkedIn. So there's LinkedIn on there. You can have a look at that, and there's the website there, which is the company name is Braithwaite Energy. So if you just type in Braithwaite Energy into Google, that will come up. And that's that you can go to the website on that. So have a look.
That's great, and I'll make sure the links are in the show notes so people will be able to find them. So that's cool.
Yeah,
cool. Well, thank you so much for joining me, and thank you for interrupting your holiday to come and have a chat. So that's brilliant. Really.
No, it's been great. No.
So enjoy the rest of your holiday. Yeah. I'll see you again.
Yeah. Cheers, Stuart. Thanks for having me on. Take care.
Cheers. So that's it, the interview with Richard Braithwaite, a really nice, knowledgeable person, really humble as well, considering how much he knows and how much he's done. And he's made me want a holiday as well. I've seen the pictures on Instagram of where he is. It looks great. So really, really fantastic. And the other thing I'll take away from this episode is that he's a real outlier. He's a chartered surveyor investing in property, which just seems so unusual for that profession. And I wonder how many other professions there are that would seem on the face of it like a really perfect fit to transition from that profession into property investing that people just don't do for whatever reason. So that's a really interesting thing I'm going to look into in a bit more detail. But anyway, that's it from me this week. I hope you've enjoyed the episode. As ever, it'd be great if you could give me a 5-star rating, a review, and don't forget to subscribe. But for now, that's me, and I'll see you again next time. Thank you so much for listening to my podcast, and I really hope you enjoyed it. If you have, please leave me a 5-star review to help other people find it, and don't forget to hit that subscribe button.